Alright, what is going on, everybody? It's Market Monkey Trades here. It is Wednesday, May 18th, and today I'm going to go over my $409 supply and demand trade I took this morning. I made that amount in about 2 hours from a perfect put play off supply in this key level we've been watching for the past 2 weeks. So make sure you stay to the end of the video. It's going to be very insightful. So without further ado, let's get into it. First, I just want to say, Market Monkey LLC on Instagram. Make sure you follow me there. We post our live supply and demand setups every day, and it's very insightful. Alright, so I have a few notes today that I put down when I made this trade, and I just want to go over the main 2 points I have here really quick. Demand zones that can't hold key levels for me will generally turn into supply zones that have good put opportunities. Supply zones that can't hold key levels generally will turn into demand zones and have good call opportunities. Now, let me show you guys a perfect example of this. As you can see, this is ES. I trade the S&P 500. ES is what tracks that. I trade the S&P 500 every single day because I think supply and demand on the S&P 500 is probably the best ETF or stock that you could use the supply and demand strategy on because it is so liquid. Now, if you can see, this is a key, and you could even drag this over here. This is a key supply zone area that has been forming over the past week and a half. And as you can see, every time we hit the supply zone, we get flushed out. Bounce, go back down to demand, come back up, flush down. Go, hold the 200, retest the supply zone, get flushed right back down. So, when it was Tuesday and the bulls stepped in to end this red streak, this bear streak we've been having in the market, we actually popped past this key area, this supply zone right here, okay? Now, I like to look at zones as levels of interest. All right, so at every zone, you're not going to want to take every supply zone short. You're not going to want to take every demand zone long. Why? Because sometimes it doesn't work out in your favor like this. A retail trader might say, oh, let me take this market short because it's at this key resistance level. No. Supply zones that generally can't hold will rip through and turn into a nice demand zone, a nice key level of interest. All right. So it rips through this key supply zone, comes back on, what is this, Wednesday, hits supply and rips up again. And notice right here how quickly, with just these wick bottoms, that it reacted to this supply form demand level. Now, I really like these plays because normally we see very good continuation after we rip through supply, and if it comes down and tests it and is still holding, I really like that level. That's a very powerful level. So, as you can see, going into the open, we were still trying to test this level. What I wanted to see was from highs up here come back down to this supply turn demand level and rip back up into highs and maybe even into our next supply zone, which is up here at 42.50. All right. So when the bell opened, that was my plan. I was going to take this supply zone that had turned into a key level, key support level, and take it long once it hit the zone. But supply zones that generally can't hold, or demand zones that generally can't hold, is going to flush in the opposite direction. So when I saw that this supply zone that I wanted to take as demand and take it long couldn't hold, I knew that it was going to be a good put play opportunity. Now, guys, understand, I only take trades at supplier demand zones. All the price action in between is just noise. So say you are a retail trader and you didn't have any of these zones and you saw that there was a double bottom and we're starting to bounce, and you said, hey, I'm going to take this long, without knowing that this demand zone was only, what, 10, 20 pips away? So say you get long here thinking, oh, this is the bottom of the day, this is the low of the day, this is the bottom of the market. When in reality, there's a demand zone here that you still need to catch, and maybe even demand zone here that you're going to catch. So a retail trader who doesn't see these zones is going to get flushed out when you just buy and sell randomly in the market. I only buy and sell at supply and demand zones because that is what moves the market. Everything in between is just noise. So I get short at this supply zone, and my price target was going to be 4,000. Why 4,000? Because this was the demand zone I want to take my profits at. I sell at the next zone. I buy at demand zone, sell at supply. I buy at supply, I sell at demand. It's pretty simple. So I took it short here. I took about 3 to 4 contracts, got out at 4,000, and then looked for another short opportunity. Why? Because this demand zone actually couldn't hold. And let me show you what really made me trigger my second buy today. So when I'm trading the S&P 500, I'm looking at NASDAQ, I'm looking at QQQ, I'm looking at Apple and Microsoft. Now, why Apple, Microsoft, and the Qs? Because Apple and Microsoft is what is the biggest holdings of SPY, and that's what's going to be moving the market. QQQ and NASDAQ, also kind of a mirror image of the S&P 500. So whatever they do, SPY is going to have a very similar reaction. All right, so as you can see, we have this zone right here for Apple, and we have this zone right here for Microsoft. I'm sorry it's small. I don't really want to expand these windows and mess up my charts right now. So as you can see, at 4,000 when we're short for the S&P 500, at that time, we're also in a demand level for Microsoft and Apple. So I sold knowing that I took I think it was about $200 profit, and I sold at 4,000. Why? Because we're in a demand zone on SPY, we're in a demand zone on Microsoft, and we're in a demand zone on Apple. Those indicators are telling me that this market is looking to bounce. Now, when these demand zones can't hold, that's going to give extreme bearish reaction, an extreme bearish reaction. And that's exactly what happened. Once we flushed out of this demand zone on Microsoft, flushed out of this demand zone on Apple, I knew that this market was going to be very weak and below the key level of 4,000. So I had all these indicators lined up with my zones. You can't just get long or short at zones. You have to have all the indicators lined up. What was lined up? Microsoft coming out of its zone, Apple coming out of its zone, QQQs, and NASDAQ looking bearish. So those indicators told me to get short at this 4,000 level and sell at the next demand zone. Okay? So that's exactly what I did. I took the market short, added on my position, and I sold, I believe, around 39.70. That's where I sold. Let me go over a few notes. Like I said earlier, look for other indicators. Supply and demand zones are just levels of interest. All of the price action between supply and demand zones is just noise. And trade the direction of the market. And you guys already know I only enter as supply and demand zones. So how has the market been acting recently? Bearish. Let's trade that. Don't trade off of what you think is going to happen. Trade off the opportunities the market is providing you. So today I thought the market was going to be a green day. That's why I loaded my calls here at this key level, when in reality it was actually one of the most bearish days we've had in months. So just only trade the setups the market provides you, and don't force your strategy on the market. So guys, I hope this was an insightful video. I make supply and demand videos almost every day. I trade live every single morning on this YouTube channel at Market Monkey Trades. And subscribe, like, comment, and I will see you guys in the next video.